I'm going to give us a moment to study TSP traditional versus Roth. Should you be putting money into Roth? Now, if I took the survey in this group, we would find the vast majority of you, a couple of hundred people, are all putting their money in the traditional bucket for the most part and not building much Roth. So I want to push you a little bit to consider the way this would work out. If you were contributing 10% of your pay, and I hear my assumptions on the screen, 25% tax rate, just to make the math easy, federal, state combined, whatever, 4% rate of return. That's not a promise. That's just the numbers we're using to make the example. And you're making 10%, you're getting a 5% match, because I'm going to assume FERS in this case. What would that look like over the next 10 years? Well, 150,000 TSP would go to $337,000. All right, we got money. Wait a minute. In this example, is that your 337? No. I'm in Georgia, so I can say this word. You ready? Here it comes. This is y'all's $337,000. Yours and your favorite relative, Uncle Sam, are sharing this bucket of money. If we applied our 25% tax rate all at once, which wouldn't work with the tax code, but for this example, bear with me, you would have $252,000, $253,000 of money to spend out of that 337. Hold that number in your head, $253,000, okay? You'd have to pay tax on every dime. You'd have required minimum distributions at 70.5. This level of income, if you throw in your pension, your Social Security, your spouse's income, you put all those elements together, and you're 65 and you're drawing Medicare, Medicare charges you more per premium on Medicare if your income crosses certain limits. And there's like 4 or 5 tiers, 3 or 4, I forget how many tiers, several tiers that you can go through until Medicare costs a whole lot more than its current rate structure if you start piling all these sources of income together. So be careful of that. Again, I'm pushing a little bit on this front to make sure you're correctly considering Roth for your long-term plan. So let's look at the second example. You are going to now choose, instead of save 10% traditional, you're going to save 7.5% Roth. 25% tax means basically I'm just going to go ahead and pay the tax man, and I'm going to save my 7.5%. All my other assumptions are the same in this example. Nothing else changes. And then I'm going to show that that traditional balance is still growing. Why is it growing? 2 reasons. You're getting investment earnings, in my example here, of 4%. And your match, that 5%, is still going in that traditional bucket. So it's going to grow still much more rapidly than anything else could. But you do get some Roth. Notice this Roth begins to accelerate, and by the time you retire in this 10-year example, there's $60,000 Roth. $254,000, you got to give some of that to the government. The $62,000, how much do you give to the government class? Nothing. Zero. It is not income for those that are over 59.5. In this example, we've been doing it for 10 years. You're free and clear with all that money, no income tax due at all. So by the time I tax the traditional TSP and I add that Roth value, oh look, $253,000 again. I have the same dollars I can spend in retirement as I did if I put my money in the traditional TSP solely. But why is that the same? Because my tax rate was the same, and in this example, I didn't bother taking out required minimum distributions. So it's a sum-zero game until you're 70.5. It's a sum-zero game whether you pay tax now or you pay tax later. But turn 70.5, you're going to have required minimum distributions. Turn 65, if this income throws you over thresholds, you can end up paying more tax on Social Security. You can end up paying more for your Medicare premium. There's several other things in the tax code that could cost you if you're not being proactive in the way you approach this planning bit. So my point in going through this example is to say, should you be placing money in the Roth TSP while you're still employed? Or if you're over 59.5, should you make any kind of distribution from the TSP into an IRA and then Roth convert some of that based on your current tax situation?